afternoon and welcome back to my blog. My name is Morgan Larson and today we are going to talk about VA loans. So to kick it off, let's talk about what is a VA loan. A VA loan is insured through the Veterans Administration, and it is for our active duty servicemen or our veterans in the nation. And it's a great program where you can get up to 100% financing. That means no money down out of pocket, which is wonderful. Now, when the VA, they have a certain few requirements because they're insuring that loan at 100% financing. One item that they do is they have a VA appraiser go into the house and inspect it. Essentially, they want an almost move-in ready house for you to move into. They don't want a major fixer-upper. So they're looking for certain items like all the outlet covers are covered, all the electrical safe, dry rot. They want to make sure there's a thermostat in there. So they kind of look at the whole package of the house to make sure that they can insure that loan. Also, when you're using a VA loan, they tend to take a little bit longer time to have them processed and completed. So a normal escrow period for a conventional loan is about 30 days. That's kind of the average. And with a VA loan, it can take up to 2 weeks longer, so 45 days. Now, when you're buying a VA home, sometimes people get turned down repeatedly because they don't realize that they're actually in competition with people who are going to be putting down 20%. They're going to have a shorter escrow period, and they aren't going to have all these repairs that need to be done. By the way, with a VA loan, you can't pay for those repairs that are going to be done. Those have to be done prior to you moving into the house, which means that the seller has to take care of them before you move in. So you've got a few things working against you when it comes to getting a seller to go with you on the VA loan. With that in mind, when you're looking to purchase a house and you realize that there's competition out there and you have a loan that home sellers don't particularly care for, you need to give them some incentive. And usually, of course, it's the dollar sign. So if they are asking $200,000 for the house and your realtor does a market assessment to see if it would probably appraise out at $200,000, and he or she suspects that, it'll probably appraise between $190,000 and $210,000, somewhere in there, it might be wise to actually give them what they're asking. Give them the $200,000, because then the possibility that they're going to accept it is much higher. And the reason for that is because if they know they have to do repairs and they know they have to wait a little bit longer to sell the home, then you need to give them that incentive. I do want to tell you a little story. I had some people come to me recently who needed to use a VA loan to purchase a house, and a great family, and they'd used the loan before to purchase homes, so that was great. They kind of knew what the deal was. They'd been working with a different realtor, and they had put in offers on several homes. They weren't getting accepted. And within a week, they came to me. We found a home. I called up the listing agent with a plan in mind, which essentially was, is the bank willing to do these repairs? Because it was a bank-owned home. Have they done a VA loan before? And she answered all my questions, and we got it into contract, and now that family is happy in their new home. If you have any questions about VA loans or any other loan type, please give me a call or an email, and I'll be sure to help you out. Thanks so much. Bye-bye.